Hey everybody, it's Brett with your weekly recap in crypto and Bitcoin. Just wanted to give you guys some updates. It's been a little while. Wanted to give the markets a chance to shake out after the FOMC, the PPI, CPI data, and of course this weekend. So we're hitting some key resistance levels on Bitcoin that we're going to look at here in just a minute. Want to unpack some of the news here for today, and the big news that supposedly came out that Hong Kong was going to start officially allowing crypto traders and Bitcoin traders, investors to start using and investing in Bitcoin. Not exactly true. So there was a bit of the misquote on that. And so this article shows how that may have been taken out of context and retail traders may not be able to access crypto on in the summer and June 1st. So we'll have to wait and see. I'm not going to unpack the news much more than that, but that's why we didn't see the big push higher in prices that you might have expected if this were actually the case. And so initially we thought that the Asia was going to lead, which is still May, that Asia was going to lead the next bull run, partially based on Japan and China through Hong Kong, allowing Bitcoin and starting to endorse that, while the US and the SEC are apparently taking their time on regulating and starting to clamp down on certain exchanges like the Binance staking and other staking platforms like Kraken, which has already happened. So some talks that might happen with Binance. So we'll see what happens. Just to cut through some news here we have Bitcoin active addresses. Kind of concerned with analysts. We haven't seen the upswing in the active addresses in Bitcoin that one might assume we would see in the beginning of a bull run. So despite the 50% push up in prices, we're also going to look at that in some charts and why that's a bit suspect here. But just skimming down the page here, this graphic here would indicate that in prior cycles that when we saw this uptick in active addresses, as you saw here and here, that led to a subsequent rally. We really haven't seen that. It's just flatlined here in terms of the active addresses, which of course just means people, using the platform, and there's many transactions, not much volume. So won't go any deeper into that. There's a lot more we could unpack, but really no need. Also a question about, where are we going from here? Bitcoin has been hitting resistance at the 25,000 level. The line in the sand is 25,300. So we've been watching that all weekend. If we get above and can close above 25,300, then it's very likely we'll push up to 30,000, maybe 28 to 30,000. Not much in the way to keep it from doing that in terms of volume and active or in terms of the we'll look at it in the charts. But if we cannot break above 25,300, then very likely we'll come back down and retest recent lows, potentially even lower, potentially 14,000 as in the cards, and then from there, who knows. But the couple things that people are looking at is, do we snap back to 20,000? There's also an unfilled CME gap there. CME gaps tend to backfill. So I would assume and expect we'd at least come back into that 20,000 range. And so also here we have a bearish divergence on the RSI. And so this is something to look at here. And I'll pull it up on our own charts, which we'll dive into in just a moment. But also here in this chart here, we can see there's a lot of overhead shorting going on. This line here, right at 25K, these two lines. This is what's being called the Binance cartel. Heavy shorts in these areas, keeping price suppressed. And then also even above it, 25,000 and a half, 25,500. So a bit of a, so people trying to hold prices down. The bears are trying to hold prices down. But if we can break through that, it'll trigger a massive continuation of the short squeeze that has really led us here. So with that, let's jump over into the charts. First, let's look at the DXY here. I've mapped out these different zones on the DXY. This is the DXY daily. And so DXY moves in inverse proportion to Bitcoin. And we're in this nice downtrend here. So as crypto was rallying, but and then prior to that, as the crypto crash was happening all the way since the beginning of 2022, when the DXY was in this nice uptrend. Well, not so nice, but you can see this, how that played out. And then the pivot was when it kind of broke down in this new trading range here. So the question is, where do we go from here? And it's just important to watch this in the DXY, although it's been acting somewhat less coupled in the inverse fashion in the last week or so. The DXY pushed higher here, but we also saw Bitcoin pushing higher. So a little bit of decoupling there. So what I would expect to see is that sort of kind of falls back in lockstep. If the DXY pushes higher from here, you see I have this as crypto pullback zone, and versus if it kind of dips down again, this was an important line here right around 103.5, almost 104 on the DXY. And if it gets down below that, we're into crypto rally zone again. And if the DXY pushes even down below this 100 level, then I would expect to see a crypto super pump rally zone. I don't know. I don't think we're quite there yet, but that's still in the cards, as is if the DXY pushes higher above this trend line resistance right above, I'd say 105.6. We're in the crypto retesting the lows area. And then above that in this range here, we're in the crypto crash zone potentially. So we'll wait and see if that plays out. These are just some these levels here, and you can screenshot that if you want to. But let's jump over into Bitcoin. By the way, if you like the content, be sure and like the video and subscribe to the channel, and we'll be doing more of these as things in a direction kind of gets picked here. It becomes more clear. On the daily, sort of the monthly chart of Bitcoin, what I'm showing here is on our proprietary indicators, this green arrow is our early reversal indicator, and it's only triggered 4 times in the history of Bitcoin on the monthly basis, which was right down here at the market bottom in January of 2012. Also here, the bottom of April in 2015, and then in 2019. And so we're getting one also as of last month. Now, there's 2 scenarios that could play out here if history is any indication. And really, I'll just make this a little bigger here. In 2015, we pushed 50% higher, which we've just done now in 2023, but followed by a 40% drop down in retest. And so we want to keep an eye on that. So basically from that level there, it came down about 48% even from where it pushed up higher to. And that was then the bottom that pushed higher. So if we were to see something similar like that to happen, let me just reset this from where we are now. Let's just say a 40% drop would take us down to, let's see, that indicator didn't take for me. Where did it go? It's this one. Sorry about that. These tools are temperamental sometimes. So we go down to 44%, puts us right about 14,000, which is that support level. And I'll just zoom in for you guys. So this is still in the cards. You know, we could pull back to this 14,000 level. Now, it's also possible if we went down to about 48% again, which we saw back in 2015, and that would take us down to around that 12,000, 13,000 level. So, you know, there's some talk about 10,000, sub 10,000. I'm not seeing that right now. I don't believe we'll see that, but anything can change. New information equals new decision. And if I open this up a bit, also with our proprietary indicators, these 2 here, this trend strength indicator, I'll just turn these off so it's clear, is the backup. So the validation for the early reversal indicator are these green arrows turning up above the 20 line. So you can see that a little more clearly here. Only 3 times this has happened. And that was, again, 2015, 16, 2019, and then right now. So this took a bit of a pullback on the TSI and then shot up higher. So I do think we are close to putting in a low. We just don't know if we're there yet. It's possible we are. I don't know. I kind of think we'll pull back to retest the lows, maybe at 14,000. Not really feeling that at this time. And then we push higher. But clearly the trajectory on this TSI is headed higher, is in play. And so anyway, these are some of the things that I'm watching on our end. Let's see, let me put that away for a second, and we'll jump over to a little different look at this. And so it would appear we'd had higher based on the bullish engulfing candle that we had in January over December. And we've seen that in the past, though. And again, if we zoom in on this prior cycle in 2019, we saw a nice bullish engulfing candle there, and we pushed higher. So let's say this is January, let's say this is February, and then a big deep red candle the following month. And so I have been saying, and I feel it March, that next month, I think we could see a big pullback. I can't quite put my finger on the why, but it just feels that we pushed too high, too fast here. And I think this is unusual push higher. It could have been a short squeeze, likely partially a short squeeze. And so next month, we really want to watch for, do we come back down and retest that 50-month moving average? around 17,200. Do we retest this area around 16.5 where we stayed for months? Again, I had publicly predicted that May 19th on Facebook. I said 16.5. People laughed at me, but sure enough, we stayed there for months, and it even dipped down a little bit below to 15.5 briefly. Down below that, this level here, this is of course the 100 EMA on the monthly, 100-month EMA on that purple line. A couple other things here too in the the RSI. If we look at that deep down, it's down below, bouncing again off this 40 level, pushed up higher. It's back above the 44 level. That's bullish, but there are some divergences that we'll look at on the weekly basis. However, the MACD, the monthly MACD, looking good, is turning higher. This is one of the signals I used to call the top back in November of 2021. And by January, when this crossed, was pounding the table to get out of these markets. So similarly, in the next few months, when we see these two lines cross over to the upside, this is what I'm expecting to see, but it may not be till June, maybe into the summer, maybe a little earlier. But July has been a pivotal sort of turning point in prior years. Certainly July 2021 and last year 2022 saw a nice upswing in July. Some are saying we will get there sooner, like Mark Yusko is saying we'll see it pump sooner than that, early summer. So that remains to be seen. We'll have to take a look at that then. Down to the weekly here, here's the bull market support band. So we're nicely above the bull market support band, and we haven't come back down to test it really. So that's good. Bull market support band coming up. So if we did pull back, you'd want to see it hold this level, this support trend line, and right around this 22,100 support trend line, also the bull market support band. If it did sort of fall back down below, we're still in accumulation zones 1, 2, and 3, kind of based on the different levels here. This black line was the 300-week EMA, but the problem is we're running into resistance now at the 300-week EMA, and you can ignore this death cross here. I pull that up. The weekly death cross is also happening, and that's where the shorter term time frame, the 50, is coming down through this level here, and that has now triggered. So this 200-week EMA, let's just see. I may need to turn that on so we can look at the death cross here. I don't know. That to me is not as important, I think, right now. And it's a big scary thing people talk about, but it hasn't really yielded a lot of results here. So, but again, that 50-week crossing down below the 200-week EMA is the death cross. And so if we look in the past cycles here, we can kind of see what's happened. So we had it back here, and that did indicate, actually, I'm sorry, the death cross, it's this chart's not going to show, it doesn't go far back enough. I didn't really want to get into that primarily. I don't think it's that much of a big deal technically, because we, on the daily basis, we're seeing a golden cross. So it's kind of like here or there. These aren't really the things I'm paying attention to. I'm paying attention to the bull market support band. And if we can get above, we've got to get above 25,000 really, because of that 200-week moving average, very important line in the sand, as is the highs here. So let me just jump to a shorter time frame. Actually, we'll get to that. Let me just hop over to this actually. So yeah, this 25,300 was the high right back in here. So that's what we've been watching all weekend. A break into close above this. Again, I think we push higher to 30,000. And if we can't, we're kind of putting in what's looking like a possible head and shoulders here. So that would be not so good here. So if this was the left shoulder there, all right, and let me copy that and paste it up here. Let's say this is the head, and what we could do is bounce down and do one of these. So if we saw a right shoulder forming, that would be bearish. Okay, so we want to keep that in mind. If the prices kind of bounce around here a bit, come down to there, do that kind of thing, that would be that head and shoulders pattern that we've seen play out time and time again. But on the bullish side, we did get the hash rate indicator, the buy indicator back here. Isn't infallible. We also had it trigger back here as markets were heading lower. So take that with a grain of salt. Just jumping back into this version, look at the weekly 2 on Bitcoin. So this is kind of a zoomed in version of what we could see. I think we're going to have trouble breaking above this 25,300 level. Got right up to it, 28,297-ish, and almost nearly got up, but it's been rejected a few times. So I do think we'll pull back here. The question is, how far back do we pull down? Yeah, there's that CME gap right down this 1900 range. So I do feel like this is more likely to come down to these levels and then resume the uptrend. That's what we'd hope to see. And so that's kind of what we're looking at on that chart. All right, well, moving right along here, we have also to keep in mind, we have a bull flag here. So the big question is it bull or bust? So we have the flagpole here from, that's, let me zoom out a little bit. I drew that on a daily. It wasn't straight up. It sure seemed like it, didn't it? So that's the flagpole. We're in this sort of bull flag here. If we went to a daily, it looks a little more clear. And so on a weekly, it was vertical, but it sort of course, took a few days, pushed up. See, 1, 2, 3, 4, 5, 6, 7. That's a former record of up days in a row on Bitcoin. And I think we did hit 8 prior cycle briefly, but here's that bull flag forming. So the measured move based on the flagpole, if we break above here, would put us at, guess what, 30,000. Okay, the other reason that 30,000 is significant is if we go back in time, all the way back in this range, a lot of liquidity here at that $30,000 level. The range here is 28K to 32K. So this is likely where we'll see some profit taking if it does push higher, but there isn't a whole lot of volume in here, so, or resistance, not a lot of support, really nothing. We slid down through that range like a hot butter through knife, hot knife through butter rather. Had a feeling I was going to get that wrong. Hot knife through butter. And but again, break above here, shoot up to 30,000 likely. And if we can't, then I do think that head and shoulders pattern is likely to break down and play out. So we'll see. Likely this week we'll have some indications there. Also, sort of a importance on the indices. S&P 500 back down below 4,000, right at 4,000. So that's a significant level. Kind of a interesting wedge pattern that's forming. We'll have to see what happens there. But, we just don't know here. Is Bitcoin still tied to the U.S. markets? There's some talk of a huge amount of liquidity being injected right now in Asia, Japan, and Hong Kong, injecting a lot of liquidity, and China also into the overall markets, which could wind up in a huge surge in money flowing into Bitcoin and crypto, and the quantitative easing that they're doing over there while we are still tightening. So what could happen, and I was watching something interesting this morning, and what could happen is that with all of the easing going on over there, it boomerangs our inflation. So we have a deeper recession to come. And that's certainly geopolitical a chess that's being played. I don't know if it's purposeful or not, but we could see the Fed having to really tighten down on interest rates even further because of the easing that's going on and over in Asia, and that could make things worse over here, and that could fuel the next big rally in Bitcoin and crypto. Certainly not something anybody saw coming in the last 6 months, but as we know, anything can happen in crypto. And so with that, so let's see, not really a reason to hop over. I mean, one quick thing is in terms of strength here, Phantom Coin was showing some strength here on the daily. It is, while everything else is down, still bullish on the day, a bit of a topping tail. So it looks like profit taking, but it's holding at its 21-week moving average. So Phantom Coin, some signs of strength, great project, a lot of great things coming out on the other dApps that are built on Phantom. So no surprise there that we're seeing at least a moderately bullish day, but everything is going to follow Bitcoin. That's the North Star leading the markets here. And it does look like it's hitting resistance in this upper range. And I would expect it to roll over. I am leaning toward more of a bearish pullback in terms of that. So at any rate, that's all we have for you guys. The big question here is bull flag, bull or bust? Do we go higher or do we break down into that other pattern here that I pointed out? And not really any clear signals here. It is looking a bit overbought on our signals, though, on the daily basis with the bearish ERI not quite triggering yet, but our TSI is rolling over. I think that we may, not clear signals, so we just don't know. I do like those longer time frames. If you do want to get access to the indicators that we showed you a moment ago, you can go to moonstream.io/success. And there's information there about these indicators that we use. our early reversal indicator, the trend strength indicator, the signal line, and this one down here, our trend indicator, which is great. Once there's a new trend, when a new bell forms, that's the buy signal. And then the bag of money is when you take profits and wait for another buy signal. So this is one that's great in uptrending markets and is what we rely on for these longer term timeframes. So that's what tells me we are near a bottom. This green arrow here, whether we pull back to 14,000 or whether we shoot up higher, in the scheme of things, not really a big deal. Again, the only 3 times we've seen this land were at the prior 3 market bottoms. So I do feel that we either have put in a bottom or we'll come down and retest it. Worst case scenario, maybe down to 14,000. So that would be a level I would like to see. One more indication on that on a weekly basis. I'd like to see a weekly early reversal indicator, which had called the weekly tops going back in, if we just go back here, that indicator is excellent and calling the weekly tops and bottoms. So we caught the bottom here in July of 2021, and then bearish, bullish, called the market top to the day and to the week with that ERI. Came down, had a bit of a bounce here in March 22. We caught that too. And then that red arrow, this was the early reversal indicator that we've built. And so just looking at this, we haven't had a very clear signal other than we had one 2 weeks ago that is bearish. So we will also, I'm looking for the follow through, the confirming indicator for this trend strength indicator to turn down to red. Haven't seen that yet. Could be happening this week. So we want to keep an eye on that. So anyway, it is just another way to read these markets. And so anyway, with that, I'll let you go. And we'll look at this again next week. So again, if you like the content, hit like and subscribe down below. And that's all we have for you. So take care, everyone. Bye-bye.